Hello, everyone. Thank you for joining me this afternoon. Can I just confirm that you all can hear me clearly? Yeah, thank you very much. So thank everyone for joining us today in the afternoon. So actually, I'm on both Facebook Live and on the Zoom. Okay, so we'll start shortly. So let me change the slides. Okay, so basically today's topic will be on the FX CFD on our Poems platform. So I'll also go through a bit more on the CFD as well as the FX portion on CFD. All right. Okay, so this is the base content, right? The rough content outline. Okay, so basically, just to explain what CFD is, CFD is an acronym, so it's actually contract for difference, which is actually a derivative product. Right. So basically, the main idea of it is to allow you to trade in a price movement of an underlying. Okay, so the underlying can be a share, can be an index, can be gold, can be silver, or can even be FX in this case. All right. So you don't really own the share of the company if you are actually doing on derivative on CFD for shares. All right. So CFD also allow you to trade in different markets so that you have more flexibility in doing the trading. And I'll explain very shortly on how you can actually do it on a fraction of capital required compared to a usual traditional trading method. Okay, so for CFD, it's basically between you and the company. In this case, it is Phillip Securities. All right, so your trade is only between yourself as an investor and us, even though we might use the actual trading price of the underlying itself in the stock market or wherever. All right. So the advantages of CFD is basically for you to allow you to trade in both the bull and bear market. But usually for stock market, you can only mainly trade for long, mean you buy and then you sell later on when you earn money. Right. So generally you can only take part in bull market. But CFD allows you to actually also take part in the bear market, which actually is very important right now. Because right now, I think most investors can see that volatility that we are facing due to the current market scenario from the COVID-19 and as well as other political situation coming up. All right. So you can actually short sell without having to borrow shares because the whole CFD is that we already help you to bundle everything together. So you just short on a CFD to enter into a short sell position or a short position in a particular instrument. All right. So the margin requirement is as low as 10% for equity side, and for FX can be as low as 5%, meaning you can have 20 times leverage for FX. Okay, so leverage basically means that you can multiply your money, the effect of the money to be able to larger quantity or larger scale, or you can actually use less capital to trade in the same scale. All right. So in the example of 10%, you only need to put up 10% of the capital outlay required as compared to when you normally trade on stock where you have to pay upfront 100%. Okay. So for CFD itself, we do have multiple markets involved, all right, just to let you understand roughly. So other than the less capital outlay, you also can have trade different various markets through only one account. And you can also have a diversification and hedging tool, which I will explain further later as well. Okay, so today's topic will be on FX. So why FX is because if you're not aware, FX actually is the largest market, financial market in the world. It's larger than the stock markets, all right? So basically, the FX market trade exceed up to $5 trillion, all right, compared to a daily trading volume of 200 billion US dollars for the equity market itself. Okay, because the FX is various instruments in stock market in the asset of commodities as well as FX trading itself. Okay. So trading of FX have a benefit mainly because it's tradable for 24 hours a day for 5 days a week. So compared to your usual stock market where there is a trading hour limit. So let's say you normally have work itself, you might not end work in time to trade in the Singapore market generally. So you might actually face certain issues on that. And then instead, if you have FX trading, if you want to take part in it, actually there is no real time restriction. As long as in the weekdays, you're actually able to trade up to 24 hours, right? Then there's no commission involved in the trading itself, all right? And it's bi-directional, meaning that in CFD, same as the FX, you can both long and short a certain currency, okay? And it's because it is so big in the market, as mentioned just now, there's no one that can really corner the market, so there's no real market manipulation for FX. unless there's certain political event that might cause certain spikes that you must be careful of. Okay, so FX CFD trading is basically just foreign exchange, right? Where there's two different currency that is compared together, all right? So you trade in the currency itself, you buy and sell certain currency based on the rate that is at the market price, or you can queue to be of a lower price or queue at a higher price of the currency exchange rate. Okay, so it's basically also an OTC exchange, all right? So meaning that's why you can see different type of rates sometimes quoted from different brokers. There might be a slight differences between the different brokers, but generally they are quite similar in nature as well, and their movement should be in tune, even if they have slight differences in the exact spread that they are at. Okay, so FX also allow you to trade across the global market. Okay, so currently FX is quite a new product that's introduced by the poems here. Okay, so to understand how FX will work, it's going to be quoted in 3 letter codes. So you normally see AUD, USD, SGD, all this. So these are all 3 letter codes, and we compare 2 different currency for FX. Okay, so it's not only one currency itself; it's 2 different currencies compared together. So most people should be familiar with at least the USD/SGD, which is the exchange rate between Singapore dollars and US dollars. Okay, so how do we trade is that you must first understand, for compared to usual trading of stocks where there is a bid size, all right, where maybe it's 1 cent or 0.5 cents. Compared to that, for FX itself, is normally in pips. Okay, so it's the same idea. So instead of the 1 cent or whatever, it's going to be the 4th decimal place or the 2nd decimal place, considering depending on the currency involved. So for example, like in your pound to US dollar, all right, so let's say it's going to be around 1.3 something. So the rate will be at 0.0001, the 4th decimal place. Okay, it's 1 pip. And for US to Japan yen, because it's a larger quantity, like 100 plus, so usually it's on the second decimal place. So they show 3 decimal place, but it's on the 2nd decimal place that's a pip size. All right. So basically, even put it simply, 1 pip on a 10K contract is $1 US. Okay, 10K contract is $1 US. And normally for FX CFD, we actually have a contract in 10K value, right? So 1 contract is 10K itself in FX CFD. Okay, so the base currency will be the one on the left side, and the term currency will be the one on the right side. So when you buy and sell, right, for FX itself, you are buying or selling on the base currency. Just for you to understand. So if you pound to US, GBP to USD, we are believing that pound will appreciate against US dollars in the short term or in the long term. All right. If you sell, then of course the other way around. But the transaction itself, right, the transaction value in poems will be in the term currency, which I'll mention later. So you see here, so if pound is 1.3 to USD, means that 1 pound can convert into 1.3 US dollar. All right. So later on, if let's say the pound increases to 1.45, it means that 1 pound is now worth 1.45 US dollar instead of 1.3. So if you can see this, right, they are both 1 pound. So the actual profit and loss calculation will be in US dollar, where in this case, you have earned 0.15 US dollar if you enter into a long position or into a buy position for the pound to US dollar. Okay, so one of the examples to calculate the profit and loss. So let's say you long in a long scenario where you buy the contract of the pound to US at 1.3. If you buy one more, if you sell the contract at 1.45, okay, each contract is 10K, like I mentioned. So 0.15, which is the difference between 1.45 and 1.3, times 10,000 will be worth 1.5 thousand US dollars, right? So in the other way around, let's say you have bought in a long position also, but you have bought at 1.4. But instead of going up, the currency went down to 1.35. The loss will be calculated based on the selling one minus the purchase price, which is now negative 0.05, times the contract value of 10K. That will be $500 US dollars. Okay. So then of course for FX, even though there's no commission in trading, just take note that it's not one price only. There is a buy and sell price, right? So then buy and sell price, the difference will be called the spread itself of FX trading. So it's same like when you go to a money exchanger, you will see that there is a spread between converting to a currency and converting the currency back to same dollars. right? So in this case, the spread of the FX will be the one that have a certain cost to you. So do take note on that. All right. So let's say you enter into a long position, you're going to be buying on the ask price because you are buying, and then when you sell immediately, you're going to sell on the bid price. So if you open and close immediately, you'll be losing on the spread value. Okay. So for FX itself, we do allow up to it's 5% minimum margin now. It's recently changed. Previously, at the start, there are some companies that offer 2%. But right now, the regulation states that it's going to be 5%. So it's 20 times leverage for the FX trading, right? So similarly to, let's say you have a normal CFD position, or when you have a leverage product, if you're going to hold for overnight, there is this thing called borrowing fees. So instead of borrowing fee or financing fee for FX, they charge it as per swap points, meaning because when you buy and sell currency for FX, there is a difference in interest rate between the two currency. So you must sort of pay or gain the difference due to the currency based on the position that you are in. Okay. So for example, if let's say it's pound to Sing dollar, if Sing dollar have higher interest rate than pound, if you enter into a long position where you believe pound will go up, you are buying pound, you have to pay the difference in interest, meaning you're losing interest. Whereas if you short pound against Sing dollar, since Sing dollar have more interest, you're going to get interest during the overnight position in short of pound against Sing dollar. Later on, we'll explain more on that again with more examples. Okay, so basically for CFD itself, our platform do allow you to trade across all the FX pairs in the method as seen in the screenshot. So you can see clearly, all right, as well as the trading in the box on the right-hand side. Okay, so you can also trade FX along with your trading of stocks, EQ, or your trading of other CFD equities at the same time. So basically, this is a one-stop shop. Okay, so the spread that we are currently offering, these are the major pairs that most people trade. So if you see the Euro, USD, USD Yen, the pound to US dollar, all these, all are the common spreads, are the common pairs that people trade, right? So we are very competitive compared to the others, right? Competition. And we hope to maintain the competitiveness. And also we also can actually give a better type of product range for the investors to consider for the FX CFD itself. So right now we have 35 pairs increased from our original. So when we first started off, we only had a few pairs, I think 10 plus pairs. Now we have 35 pairs for different currencies to trade on. Okay, so basically as mentioned, all the margin and profit and loss will be calculated on a term currency, which if you have missed out is on the right hand side. So it's a term currency. And the swap points will be processed daily as per overnight position if you hold over 5 a.m. All right. So meaning that's an overnight position, even though it's 24 hours. All right. So a 5% margin requirement is for all foreign pairs. Okay. So it's 20 times leverage, and it's a fixed amount. You cannot change the leverage ratio per se. So for more information, you can also go to the website that I linked over there. You can take a look. Okay. Later, I'll also show the website in the presentation itself. Okay, so basically to note, when you want to buy or sell CFD, you have to take note that you are buying, it's a long order, it's going to be buying at the ask price. And if you're going to sell, you're going to be selling at the bid price. This is the same for both equity CFD as well as for FX itself, all right? So for example, let's say there's this stock that is a current buy price of $1 and the sell price is $1.05, 1.005. If you want to buy into this position directly, you have to buy into the sell price. Okay, because you cannot queue and hope to buy immediately. If you're queuing, you must wait to the price change before the order can be done. Right? Because this is a OTC between you and Phillip Securities only. There is no queue system for normal CFD. Okay. So remember this golden rule. So you buy on the ask and you sell on the bid price. Okay. Okay, so another example, just to show on the power of being of a leverage itself. So in this example is where you can buy 15,000 shares of the XYZ, all right, at $2.3, all right. And when you compare to the margin ratio of 10%, so in the stock wise, it's maximum of 10%, so it's 10 times. So to calculate on leverage function, you will see compared between the stocks CFD and DMA CFD, basically focus on the stock and CFD itself. You can see the initial capital that's required for normal trading of shares is 34,500. And whereas the trading of CFD only need 10%, which is 3,450. But the contract value is the same. The contract value is the same size because they are the same number of shares. All right. And the commission itself is different, right? Because CFD have a lower commission compared to the traditional trading account that we have. All right. So there's also clearing fee for stocks trading, SGX, and the clearing fee, everything. But for CFD, there's only commission. There's no clearing fee involved. However, for CFD, because there's a leverage product, there is finance charge involved. So you see the finance charges over there. And compared to the closing price, let's say you have opened at 2.3 and sold at 2.5, which is a gain. All right. Instead of gaining, okay, the gain amount should be about the same. Okay. But then the gain percentage based on the outlay of capital that you have put in is much higher for CFD compared to stocks itself. Okay. For some of the questions, I do see some of the questions that you're raising. Do put it into the Q&A. I will address the questions at the end of the presentation. Right? Okay. So, of course, when the leverage for gains, there's also leverage for losses. So do take note, if the opposite arises, you will also magnify the losses and not only magnify the gains. Okay. So this is the same scenario of 20 cents. Instead of gain, it's 20 cents loss instead. When you open at 2.3 and sell at 2.1. Okay. Okay, so instead of being a long position where it's more for the as per usual in shares itself, if you are bearish on a counter, usually in the past you have to do borrowing of shares, you must do other instruments itself. But for CFD, you can just engage into a short position as easily as just clicking on the sell button. As long as we have the availability of the share to short, you can actually open a short position in CFD itself. Okay, assuming the same percentage of 10% for this counter. So let's say you open at $1 and you believe it will go down, and it did go down to 90 cents, and you close. So the CFD one is the same, a similar structure where there's commission only. There's also finance charges, and there is the contract value and commission. So your contract gain on this example of 10 cents, right, which is 10% of $1, is 91% gain net after minusing costs. So 10% gain in the position that you have put earns you 91% because of the minusing the cost itself on the leverage of 10%. So leverage 10% plus the 10% gain on the stock itself is 10 times of that. So you earn 100% if there's no cost at all. But since there's a cost, it's a 91% gain net. All right. Compared to the usual in the past, if you don't have CFD, you have to do this stock borrowing and lending where you borrow actual shares. Then the number of shares is the same. Initial outlay is higher. And then there's also higher cost in commission, as well as similarly, there's still finance charges. So you can see that how CFD is actually more efficient than SBI in terms of cost structure. Okay. So of course, like I mentioned, instead of only going this short position, right? Instead of only earning, you can also maybe a losing position. So to take note on the risk involved. Okay. So for queuing itself, right? For shares, there's a limit between 20% up or down of the current price. That's a limit to queue. And for DMA, that's only for Singapore, it's 20 bit as per the usual one. But for indexes, let's say you want to trade in index other than that for FX, you want to trade in the S&P 500, you want to trade in NASDAQ, or trade in Singapore Straits Times Index, there is a plus minus 5% they can queue up or down to. So let's say Singapore is right now at 2.8 thousand, you can only queue maximum of 5% lower to have engaged into a buy position in the queue. Right? And do take note that you cannot just take a CFD position to sell your actual shares, or don't buy actual shares to cover your CFD position. So if it's a CFD, just do take note that your position value position itself must be open and closed through the correct instrument. So CFD to close CFD, and if you are trading CFD DMA, to use CFD DMA to close. Okay. Okay, so other than FX and equities itself, there's also the World Indices CFD that we offer in the CFD platform. All right, so you can trade in the price movement of the entire stock index itself. Okay, so if let's say you are more of having an opinion of the stock market or the exchange as a whole, let's say example Singapore Straits Times Index as a whole, compared to individual stocks, you want to engage into this through a leverage product. CFD can be one of them to allow you to trade into these index movements, right? So you can buy and sell on both rising and falling market times, and there's more leverage. So now it's 6%, right? Previously it was 5%, but because of the recent volatility, we have changed it to 6%. So it's around more than 15 times leverage power in terms of the index trading. Okay, so example given here is, let's say in a Straits Time index, right? So there's a $5, then SGD $5. It means that for every point of the index is worth $5 Sing. All right. So in this case, if it's 3,000 points, the value of the contract is 15,000. 3,000 points times $5 each point. Okay. And if you see currently there's a spread, right? Similarly to there's a spread for STI trading, because this is not an actual market itself. There's no stock price to it. So we will raise based on the spread itself. And then the spread is 3.6, means that it will be up and down 1.8 of the actual index value currently. Okay. So in the example of Straits Time Index, you long at 3,000, so contract value is 15,000. Your margin requirement is only 5% here, but actually it's 6% now. So instead of 750, right, if it's 6% now, it's going to be $900. Okay. So for indexes or for even for other CFD and stuff, there is participation in corporate action. Of course, FX CFD don't have this, because FX CFD there's no corporate action. But if you trade in the index or you trade in the equity itself, there is the corporate action of, let's say, example, dividends. So on the dividend X date itself, we will adjust for the cash position in the CFD account. So it's on the X date, not on the payment date. Compared to if you trade on the shares, usually you only get the money or the dividend on the payment date. But for CFD, you do get the value of the money, of the dividend value on the X date itself, which is an adjustment to your position. Okay, so if you long a position in CFD, you will get a positive cash adjustment added to your cash ledger. If you short, then you have to pay, means it's a negative cash adjustment to your cash ledger. Okay, also note that for CFD, there's no real time limit, but every 30 days, calendar days of the opening of the position, they will automatically close and open again at no cost and no commission. It's just to realize the profit and gain, as well as the financing cost involved in the month that you have opened the position. All right. So let's say you open at $2 and you renew at 2.28, right? There's already a loss mark there, and then 2.28 you go down to 1.9, then you'll compare the finance charge of your renewal to closing. Okay, because your first profit or loss at $2, and then at 2.28 is already cleared off at the point of time on 30 days. But when you close it again after 41 days, you will close at 1.9, but you will close between that price and the 2.28 price instead of the 1.9 to $2 price. Okay, so to note for CFD itself, you must at least maintain certain ledger, all right, because CFD is a leverage product, all right. So when you trade itself, right, you have to ensure that when you open the position, the portfolio market value, which is the open positions that you have, the portfolio, you have more than 10% to not have a margin call. So 10% is what? 10% is your cash in the CFD account. So let's say you have maximized the leverage ratio, you have maximized it, you should be at 10% with no spare cash to open new position. So let's say if the market go down slightly, you might be engaged into a margin call position. So to take note. So when it's less than 10%, there's a margin call, and you have up to 2 days to make the clearance. But if let's say it drops so much that it becomes less than 5% of the market value in the position in the account, then you must take note that you only have up to 1 day to make the payment. Of course, you can find more about this through the trading representative if you don't really understand how I explain this. Okay. So to make payment, you can either make payment through cash top up, through EPS, or through PayNow, or even fast transfer to your trading account itself, or transfer straight into the CFD account through eNets. Okay. So if let's say the margin call comes and you didn't do any top up, there might be a closure of position to top up to cover the amount required. Okay, so do take note of this. Okay, so for CFD itself, right, you must understand that CFD have various strategies that you can have on why we actually trade on FX CFD or even trade in stock CFD or world index CFD. So the first one basically very simple is if you have existing shares position, all right, existing share position in the various markets, you can actually use it to hedge your position. So example, let's say you have a few US dollar position. You want to hedge your US dollar risk in the position. Your US dollar position maybe in the stock market is around 100K US. You can actually, if you already aim to sell the shares and then lock in and you want to incur the currency risk due to certain political action that might be happening soon, example, US elections that may be coming up, you don't want to be involved in that swing of the currency, you can actually engage into a short US to Sing dollar position in FX CFD to cover. And if it's 100K position in market value for your stocks, you will engage into 10 contracts. That will be worth 100K position value in US dollar as well. Okay, so you're hedging your risk on the currency. Or if you're not sure if the market will correct due to the recent bull run already, but you don't want to sell the shares because you think that it's a long-term position in the shares, but you expect potential short-term swings in the stock prices, you can engage into a short sell or short position of the stock or on the index that is similar to the stock movement. Example, let's say you have DBS or OCBC for long-term Singapore banks, you can actually short the STI index, which is actually very much correlated with the Singapore banks because the banks are a big component in the Singapore index. Okay, so this is one of the ways. That's for hedging. Second thing is that if you already anticipate certain volatility due to market activity, market events, or due to political events, you can actually take part through CFD to long or short the position. Example, if you previously noticed the Brexit itself, during the Brexit announcement, you can see the pound versus US dollar plunging very much during the short period of time when the announcement was made because of the unexpected result itself. So if you do have certain expectation or do have certain assumptions based on the market movement of the market due to the political event or due to the market events, so you can take a look at that. Okay. Another example for trading of FX CFD is during Fed meetings. So you know the Fed meetings when they happen, usually it affects US dollar because it's on how the US Federal Reserve is trying to position the US dollar itself. So the actions that they take will make the changes against the exchange rate. So if you see the recent exchange rate movement, you can see the US dollar is generally weakening against the rest of the world because of the current way that they're pumping the money into the markets itself. Okay. So you can also open a position with a smaller outlay of funds. Example, if let's say you have certain want to trade in the short term, but you don't have enough funds to actually trade in a full size in the stock market, you can actually use CFD to actually engage into the position with a lesser amount. So example, you want to buy Apple, because you know that Apple will come up with this new iPhone coming up next month or something. You want to buy Apple, but it's too expensive to buy, let's say, 10K worth of shares in market value. So you can actually just put 1K into the CFD to have open a position of 10K worth in Apple. Just do take note that even though it's a smaller capital outlay, the actual risk or the actual movement of price will be the same. So it's a leverage for both gains and losses. So do take note of the risk involved for yourself. So for CFD, it's good to always have a take profit and cut loss price, so to ensure that you are having control on the risk that you're having. Okay. So those to explain, if you haven't have a CFD account yet, you need to pass this CKA in order to trade CFD. If you're not sure what is it, just look for the ABS or you can Google for CFD e-learning. You should see this link itself to actually do the e-learning to pass in order to trade or open an account for CFD. Okay, so to show you some snapshots also on the CFD platform. Right, on our platform itself, if you do not have a CFD account yet, you can do the CKA CRR form over here to check whether you are pass or fail for CKA category. If you are a fail, you have to do the e-learning. If it's a pass, you can already open an account and start trading after the account is open and funded. All right. So next thing, if you have the CFD account, open online through the platform that you have, if you have online account already, let's go to the CFD tab on the account management. Under online account opening, you can actually do the account opening over here. All right. Just do take note that it's not immediate. There's certain days that you need to process the account opening, but usually can be done within 1 week as long as you pass the CKA already. All right. So next thing also, when you're having the trade box, right, compared to the usual stock, where you just bid and ask and then the contract value, gross value, in the CFD position, you can see that there is this thing called the gross contract value. It's highlighted. There's also the margin requirement, which is the amount that is required to open the position, as well as the long or short finance charges, right? This is the per annum basis style charges, okay? So example, if you see this US 500, the tracking type index, the CFD, for 15K USD position, one of this is each point is $5 USD for 3K points, so it's 15K. 6% is 1.2 roughly for Sing dollar, okay, which is around $900 US dollar, which is around 1.2K Sing dollar. So similarly for FX, instead of having the gross contract value and everything, it's only gross contract value and margin requirement. Because for FX trading, there is no long or short finance charges. Okay. Okay, so basically, I will go through the questions first, right? Before I also show some of the on the website that we have for the thing, so you can actually understand how the thing works, right? Give me a moment. Okay, I think most of y'all can see the website now, but let me go through some questions first. Okay, so 1 point move with a 20 times leverage means a 20 point move instead. Okay, so basically it's not by point I mentioned, it's by pips for FX. Okay, so every 1 pip move is not multiplied. The 1 pip move is still a 1 pip move. But a 1 pip move, 20 times leverage means that the value of the move compared to if you hold on to a 1-to-1 position is 20 times more. So what it means is that, example, let's say you open a $10,000 position, a 1 pip move is $1, right? So if you actually have a $10,000 position, if you use full cash, you only earn $1. That's going to be a 0.01%, right? But if you use leverage 20 times, so instead of 10K putting up front 10K, you only need to put in $500, okay, to open a position that is worth 10K, and you earn $1. So $1 out of 500, that will be a 0.2% gain instead. So if you compare the percentage gain of 0.2% versus 0.01%, that is 20 times difference in the gain. That's what it means by 20 times leverage. Okay, for the same CFD FX product on POEMS versus MT5, any spread or difference? For the FX CFD itself, right, in MT5 and in POEMS, it should be about the same, but there might be some slight differences based on the market volatility. However, do take note is that for POEMS, the Phillip Securities account in the FX CFD, the account ledger is in the currency that you want to hold. So let's say you transfer Sing dollar inside, it will be in Sing dollar. You transfer Sing dollar inside, but you convert to US dollar, it will be in US dollar holding. But for MT5, the holding of the currency is always in US dollar. Okay, just do take note of that. Of course, the MT5, if you are a professional trader, you want to trade a lot very actively into the FX CFD. MT5 might have more functions than the CFD FX that we have in the securities platform, which is more basic. So the FX CFD for the securities platform is more for you to try out, and as well as do together with the other equity CFD trading itself. Okay, so what determines the interest rate for financing? Okay, so why is the long higher than short and SGX is the reverse? Okay, basically, I'm also not very sure on exact detail of how they determine the long or short finance charges, but I believe it basically might be the cost of the company onto trying to open the position. So meaning how much cost is to the company to hedge your position to us. Because it's your position, you do the trading through to us. So our company also have to hedge your position to the market itself. Okay. So just take note on the finance charges. You can actually see the finance charges over here in the CFD website. All right. So if you're looking at the finance charges itself, right? Okay, give me one. You can actually see the finance charges through. Okay. So example, let's say over here, if you go to the page itself, you can actually see the details of the trading. Okay. You can also see the detail of trading and the trading hours, which are very different. And the finance charges can also be seen in the list of trades or the pricing over there. Okay, under pricing. How to get more gains? Okay, this basically is, I think everyone wants to get more gains. So if you want to get more gains, basically you have to enter into the right position at the right time and then make the gain. So I cannot be the seer to actually give you to that you definitely will make more gains. Just that if you have a right position with the same amount of underlying funds, you could possibly get more gains through CFD. But do take note that even though there's more gains potential, there's also more loss potential as well if your position go against you. Okay. Can you explain on the leverage again in terms of basis points? Okay, so basically, just now I mentioned if it's on a $10,000 contract, right? 1 pip is $1. So example, 10K US FX position, 1 pip is $1 US dollar. So if you calculate that in a percentage basis, that is 0.01%, okay, or 1/100%. But if you actually put in full cash to make position, you only earn that value. But if you trade on FX CFD, you need to put up 5%, right? So that is only $500 out of the 10K in the contract. You put up $500, you get $1 gain. 1/500, that is going to be a 0.2% or 20/100 gain. So this 20/100 is 20 times more than if you put up full cash in a position itself. That's why it's a 20 times leverage. All right. So currently for trading of FX, we only have maximum of 20 times. Okay, it's a regulation right now. Previously, the highest I think for the against competitors is 50 times. But currently, right now, MAS have regulated to only 20 times for FX in Singapore trading. Okay. So the next question asking if, let's say you have a bank account for equity shares, can you use it for CFD? Sorry. So to take note that for CFD itself, it holds a separate ledger from the trading account. So let's say your trading account is through gyro or through a bank transfer into money to trade, right? It's not the same as the CFD ledger. So you have to transfer the money into the CFD account first in order to trade. If you already have a ledger of money in Phillip's platform due to your trading account, you can transfer between the two ledgers, meaning from the original account to the new account, or from original account to the CFD account. Okay. Okay, so there's one question asking on you missed part of the presentation. Okay, so I believe this presentation will be on Facebook as well. So you can actually refer to the Facebook recording if you miss any parts of the presentation itself. Okay, so there's not much question in the Q&A, but I think there's one question, one person that put questions in the chat itself. All right, so first question is whether there's an interest reset to a new price when a rollover happens. Okay, so when there's a rollover, right, basically they just realize the profit and losses in terms of price because they close and open again at no commission cost. But the interest is already charged. Okay, so the interest reset, the interest itself is already based on the market value of each day. So it's not really reset to the new price. Interest is charged based on the market value of the position itself of each day. So let's say you open a position, all right, if it goes up, right, the value can be, the market value is always rising. The commission is already fixed at the start of the day, but then the interest rate is always rising as well. It's a per day calculation, even though we charge you at the end of the month, right? But it's a per day calculation. The rate that you see in the boxes now, in trade box, is actually a per annum finance rate. So they'll calculate it based on a per day basis, and then they'll accrue in the CFD account. Okay, so why are some of the CFD trades for liquidation of existing position only? Okay, so basically, if there's too many people that open the same position, meaning let's say short example, let's say everyone short a particular counter, then we might only change the CFD availability of the trading to be of liquidation, meaning to close your current position. Because we are unable to hedge for more position or unable to borrow shares to get enough people to open the position. Because basically, for Singapore share example, for Singapore shares, we don't allow officially they don't allow short selling, but CFD allow you to short position is because we are able to get the shares to accommodate in the background of this working of the whole CFD. So we do everything in the background. We allow the CFD trading to let you do a short position. But if everyone open a short position, the background movement or background, the borrowing of shares might not be sufficient to support that. That's why we only allow liquidation only. Okay, what will happen to CFD position when the underlying is suspended? Okay, so it depends on what the suspension is for. If it's for long term or for short term. For short term, basically normally nothing will happen. But if it's for long term, what they might ask you to do is that they might ask you to put up, instead of the leverage percentage of 10%, example, they might ask you to put up the full amount of the market value of the position in collateral in the CFD. Meaning, example, let's say originally to open a position of 20% for 10K worth is only $2,000 to open the position. Instead of 2,000, if it's now suspended for long term, you might need to top up to 10K. Okay. So that's some of the things to note. So do be careful if you trade counters that are maybe facing suspension risk, not to think of that. Okay. So there's another one question. Okay, so do you know any shares to help me get more gains? Basically, the one you can see on the various analysts. So my personal take is I usually like to go to the analyst sites to see some of the opinions they have, and then I just take the opinion that I agree with in my own investment strategies. Okay. Is there a minimum lot size for FX? Okay, so the minimum size is each contract is worth 10K of the base currency, the one on the left side. So USD to Sing dollar, one contract is 10K USD, right? So we will use it in Sing dollar equivalent. The term currency we will use to deduct the money, but the contract size is based on 10K times $1 of the currency on the left-hand side of the pair for FX. Okay. Can both USD and SGD be used for CFD trades in POEMs? Yes, correct. Both USD and Sing dollar can be used in the POEMs trading. Okay. So let's say you open a position in USD SGD, that position of FX is actually in Sing dollar base. So you don't have to convert to US dollar. But if you open a position in G pound to US, the contract is in US dollar base. So you might want to open or convert some of the money in the CFD account to US dollar. But if you're going to have a position for a very short term, some customers they don't convert the money in the CFD account, because if it's going to be a short term position, let's say intraday trading, you open and close FX position, you only get the gain or loss basically in the account after closure of position. Then you can then decide to convert Sing to cover the losses, or to convert the US to Sing to take profit on the gains itself. Okay. Is the price that you see the real price, if not how much different? Okay, basically the price that you see for trading, if it's for equities CFD EQ, it is the live price. Okay, for SG. For US and other markets, okay, there is a price delay, but it's supposed to be, it is the real price that is the price delay due to the feed of the pricing. So for US, you have to apply for the US live prices in order to get the live price view itself of on the CFD platform, similar to how you can trade in the US market in the EQ in the stocks side as well. Okay. Then for index as well as for FX, right, there might be some differences when you compare between brokers, because they might use different futures to hedge, or use different futures to base off the pricing that is shown in the CFD. So do take note on that. But usually, even though there might be differences in the exact value of the index or exact value of the FX, the movement direction, the scale should be the same. Okay. Okay, is there a step-by-step demo on how to trade using platform for CFD? Okay, so basically, I'm going to show it as well. Okay, so if you look at the current browser right now on the screen, okay, the POEMs platform is like this. Okay, if you can log in through the POEMs homepage, right? You log in through here, the POEMs platform is like this. So usually, let's say you trade in the stocks, you'll be on a stocks page. But instead on a stocks page, now you choose CFD. You can then choose CFD and then choose the market you want to trade. Okay, so for indexes, you can see over here there's index trading. All right. Or if you want to see FX, you just go to choose all the way to the bottom. There's FX pairs here. There's currently 35 pairs. So you can scroll to see the pairs involved. And when you double click on the name of the stock or the FX pair, example, let's say Euro to Sing, you double click, you will see appear on the right hand side on the trade box. Okay, and the contract value of 1, they will show here is times 10K, so 1 contract times 10K is worth 15K Sing dollar, example. And the amount you must put in as a margin requirement is overshown here as well. Okay, do take note that if your account is a real account, this is a demo account. In a real account, you will show your available cash over here and credit limit. You must ensure that you have sufficient available cash to fulfill the margin requirement in order to open the buy or sell position. As well as your overall, the total CFD account, right? Your total position cannot exceed the credit limit over here on the right hand side. Okay, so do take note of these 2 points. Okay, so for further things, you might want to email me later, okay, to check on how to get the details on the, if you still need more help on how to trade using the FOREX platform for CFD. Okay, also you can also look for your trading representative if you have a CFD account already. Okay, so does liquidation apply to long position or purely for short? Yes, liquidation applies for both long or short. For certain CFD products, they don't allow any more new trade at all, so 0 opening of new trades. So when it's only for liquidation, if you have a short position, you are allowed to buy to close the short position. If you have a long position, you are allowed to sell to close the long position. Okay, so basically it depends on which position you are holding. So we allow the liquidation of that holding itself or that position itself. Okay, I mentioned Facebook. So if you can go to Facebook, you can search for PhillipCapital Facebook. All right, so it's if you go there today, you should see on top because it should be the post for today. But if you go on a different day, you might look for 30th June post itself. Okay. Okay, you got any promotion? Yes, there's promotions on CFD. So basically, you can go to our homepage over here, right? If you go to the promotions, you can actually see the current promotion that we have in the products. All right. So you can choose on which promotion you look at. So example, you look at CFD product only, you can look at the promotion over here. You can click in to read more details as well. Okay. And one thing I want to share with you for FX CFD is there's this new tool. It's called a heat map. Just now I mentioned about the swap points, right? If you hold a position overnight to gain or lose cash position based on interest differential. So heat map will show you whether it's gain or lose. So if you see here over here, right? Blue color indicate the positive swap. The degree of the blue also indicate how positive it is. The red color indicate a negative swap, meaning there might be a loss in position. So example, if you, let's say you trade in Sing dollar to Euro Sing, all right? If you open a long position, there will be an interest charge to you every day, overnight. But if you short Euro Sing, there will be interest gain to you every night, other than the price movement of the FX itself. Okay? So why is there this difference? It's because Euro have lower interest rate than Sing. So Sing dollar have a high interest rate. If you short Euro, and it means that you're buying Sing, you're buying to a currency that have more interest. But if you long Euro, you're buying the Euro against Sing dollar, but Sing dollar have higher interest, so you must pay for it. Okay, there's a difference over there. Okay, so for my email address, okay, let's show my details over here. So this is my email address. Basically, I'm a branch manager at Bukit Batok Phillip Investment Center. Okay, so if you do not have an account, you can open an account through the scanning a QR code. If you already have an account, you can open the CFD account. Do through the method I mentioned just now, under account management. As well as you can just drop an email to your trading rep or to us first, and you can refer you to your trading rep as well. Okay. Okay. So for the platform itself, let me show again. So again, so to open account online, just account management, go to CFD tab under online account opening. Okay. Whereas if you want to do the CKA CR, it's under stocks under CR CKA over here. Okay. Okay, so some brokerages are giving 10-day free interest trading for CFD. So are we doing the something similar? Okay, so basically for us, right, the interest, there's no interest at all for, okay, there's no finance charge at all for FX CFD. There is the swap points, okay? For EQ side equities, for stocks trading, right, there is a 2 days free financing based on the due date. But then for index trading, there is no free financing, okay? But instead of doing the free financing interest rate free one, we are having all these promotions that we have for CFD. So for trading of CFD, if you hit the criteria, you do get some trading rebates, all right? as well as free trades if you do not have a CFD account before, and you open the CFD account. If a new CFD account, you can actually get up to free trades, or you can get up to other promotions coming up. Okay. Well, I think the free trade one is ending today, but there is other promotions coming up for CFD account. Okay. So if I'm not using CFD to trade Forex, do we need to pay dividend? Not using CFD. Okay, even if you do not have any open CFD positions, there's no need for dividend paying or for any finance charges. You can open the account first, fund it first, and open a closed position only when you want to. Okay, so at least having a CFD account open, you do have the option available for yourself if in case you do want to open a position in CFD. Because the opening of account is not immediate. So if you don't want to lose a chance, let's say you suddenly have a very strong view on a bearish scenario, where you want to short sell or you want to hedge against your current long position, you might want to open a CFD account first to at least get ready in case you need the product. Okay. So other than that, you can go to our homepage, right? If you look for more CFD, it's over here. So you can find out the information of CFD. This is the brief explanation of the charges, as well as the minimum commission for equities. All right, it's a equity CFD. Then also there's also the fees for index CFD itself. Okay, if you have an existing equity account that has funds inside the account, if you have already opened a CFD account or you open a CFD account later, you can go down to your online form to transfer funds. So basically, look at where the funds is. So if your account is a stock account and the funds is in a stock account now, go to account management stocks. Under online form, you will see there's an option to transfer into account. There will be an option bracket CFD when you want a selection if you have a CFD account. Okay. Whereas if you are from CFD account, you have made some money already and withdraw to your trading account or withdraw to your bank, go to the CFD tab for the withdrawal. So basically go to where the money is. If the money is in the stock account, go to the stock account withdrawal form. If the money is in the CFD account, go to the CFD account withdrawal form. Okay. If you use cash to trade FX, do you need to pay dividend? For FX itself, there's no dividend. FX only have the swap points. So if you use cash to trade FX, there's no need to pay dividend per se. Okay. Okay. So is there any other questions that you all might have for CFD? I think we have some time for certain other questions also. Okay, for the support to trading information, other than the FX CFD here having the heat map, you can look at the equity side to see some of the top counters in our Phillip CFD by trading value or trading volume, or by the US by value or by volume also. So at least you can get some of the insight to what other traders are actually trading in CFD to see whether they're long or short position also for Singapore market. Okay, other than that, you can also see there is other information. So example, let's say you go to education over here. There is other seminars as well as other articles that they have currently in the works for CFD trading. So if you have any need to know more about CFD, if you think that this seminar have not fulfill your total questions that you have, you can look through the other seminar that they have for information, as well as the videos uploaded. Okay, so they already have some videos uploaded already with certain market information as well, or technical analysis if you're looking at using technical analysis for your trading of CFD. Okay. Okay. So is there any other questions? If not, thank you very much for joining. I will still stay behind for the time remaining. For those that have questions, you can either email me, or maybe you can just drop email to me, or you can just mention in the Q&A while I'm still here. Okay, so the email address is over here. Yep, thank you. Thank you everyone for joining during this lunch hour. Hope you all have a good lunch also. There's one question asking if you can look for me to use the platform. Currently, we are on appointment basis for the platform. For the branch itself, only appointment basis. You can drop an email to us first to arrange for appointment. If you really have to visit, if not, we can advise over the phone or over the call. All right. Okay, there's a question on DMA. Sorry, yeah. Okay, so basically, I didn't mention a lot on DMA just now because the topic today was on the FX side. For DMA, basically, is actually direct market access. Okay, so if you compare DMA to the CFD product for in Phillip, right? DMA is only allowed to be traded for Singapore equities. Okay, and the difference between DMA and CFD, you can take a look at this visual chart over here. Basically, DMA is the actual queue in the market. So just like I mentioned that you must buy at the ask price and sell at the bid price. But for DMA, you can actually trade as per a usual queuing system in your trading habits in the equity market. All right, so you can still be queuing and be done if let's say someone sells to you, even if the ask and bid price do not move. However, do take note that for DMA, there's higher cost of commission, as well as there might be higher cost in the financing as well. Okay, but if you let's say you are very used to trading equity stocks, you want to try CFD for a leverage product, you want to just start off. You don't find it very familiar with the CFD system where you must buy at the ask price. You can start off with CFD DMA first. But once you get used to it, usually for the one bit difference of price between the ask price and the bid price, generally it might not always be worth the commission involved. For certain stocks, it might be worth it, but for certain stocks, it might not be worth it. So you might want to consider these cost factors. But it's a good way to start off in CFD trading. Okay, so when you go to the trading of the in the platform itself, do take note when you choose the CFD platform, you don't trade CFD or DMA to be specifically different. Okay, and let's say you open a position in CFD DMA, do not accidentally try to close it in the CFD because these two are different. So if you open and close there, you end up with two different positions instead of a closed position. Okay. So the question on MT5 platform. MT5 platform basically is another platform that can trade FX. Basically, it's through the Phillip Futures, another subsidiary under PhillipCapital. Right. So if you're interested on that, you can look at the Phillip Futures website for more information. I believe there's also a webinar today on this topic. Yeah. Okay. Any other questions that y'all might have? If not, thank you everyone for joining in this lunch hour time. And I hope to see you all next time when I have a webinar maybe. So thank everyone for joining, and I'll end the call and the meeting soon. Thank you.